Hi, everyone. This is Rohit from Lifestyle Mastery, and today I'm excited to have Vikram Chachra, who's a founding partner of AI Ventures, which has backed 28 seed to early stage startups that have created more than $1 billion of value for the shareholders. Among the startups are several category leaders like Car Vale, Blue Tokai, MoneyTap, and others. Vikram has done his MBA from New York Stern and XLRI. Welcome to the show, Vikram.
Thank you. Delighted to be here, Rohit.
Awesome. So, you've been before the call, we talked about your journey. You've been uh, angel investing and you've been as an operator for many years. How was your experience, in New York and London, and how did that change your perspective once you came back to India?
That's a great question. So I went to NYU, and actually my first job was in London,
Nice.
and I spent about a decade outside India
Right.
before I went back. And my insight into venture investing began with an entrepreneurial insight. So I did my first startup in '99. In fact, many people don't realize this, that Europe was actually ahead on the mobile internet compared to the US
Oh,
in the late '90s. So Japan
nice.
was the most advanced mobile first country, then was Europe, and then ultimately it was the US. So if you wanted to understand innovation, you went to Japan first, and then Europe and so on. As it happened, I actually bought one of the first mobile phones with a commercial browser back in '99, and as I began to play with my phone, I had a moment of epiphany when I realized the internet was untethered, which seems like a silly idea today, but
Yeah.
it was as magical as your first experience with OpenAI.
Mm.
So it kind of confounded me that I don't have to go to a tethered spot, a desktop where I can, go on Yahoo or Google or search something. And the more I thought about it, I could see the entire internet getting consumed into this phone in the future. And so I found that the opportunity that could be wide open could be e-commerce. So I actually set out to build the Amazon of the mobile phone back in '99. That was my ambition.
Interesting.
And I was so possessed with that idea, I quit my banking job. I moved back to New York. And I convinced my brother, who was my co-founder at that time, to launch this company. The idea was to create a third-party marketplace for mobile phones and mobile devices. And we got off to a good start. We were embedded in every Palm Pilot that was being distributed. We were very fortunate to have. It's like the equivalent of being embedded in the first iPhone,
Oh,
because
nice.
Palm Pilot was like the first smartphone back then.
I remember.
Those were heavy days, heady days. And very soon, every mobile operator was clamoring to have our service on their device. We raised almost $20 million,
Right.
but ultimately we got dot bombed. And we obviously, first time founders, we made a series of mistakes. But also, the market was not in our favor, in the sense the speed of the internet on the phone was very slow. And so it was not designed for transactions. The lag time was too much. Um, I moved to California after my company was sort of sold for IP to Motorola. It was a sad ending for us.
Right.
And by that time, there was an entire dot-com bust, 99% wipeout rates across, the internet ecosystem. I joined a company which was like an early social network. It was called Snapfish. It was one of the early photo sharing companies. And I joined as the person who would build their mobile business for them.
Okay.
Um, there were no smartphones back then. We used to call them camera phones.
Oh, okay. Nice.
So our thesis was that camera phones would produce more photos than your typical digital cameras, which came true ultimately. And as we began building this whole thing out, the company had done an amazing job turning itself around. It was on its 2.0 journey. The first part, they also got busted, .com busted. And the second time around, they nailed everything. An incredible team drawn from Yahoo, Excite, and places like that. Um, and the company's revenue grew to 10x, and HP bought them for 300 million in cash. So that was a great exit for everybody. So with that, I capped a 6-year career
Nice.
building and operating startups. I thought of launching a VC fund in India next.
Okay.
When I came to India, I realized there were hardly any internet users.
Yeah.
So I think we all exist, or we all were convinced those who were building for the internet in the late 90s was the internet is inevitable. The internet will be everywhere at the end of the day.
Sure.
It was a matter of timing. It was not a matter of when, whether it would happen or not. So I decided to do something else in the meantime. I launched a hedge fund to focus on late stage opportunities in India. We were seeded by JP Morgan. I was the chief operating officer. And I took that opportunity to be on the ground in India and be early when the internet opportunities would emerge.
Okay.
That was my personal goal overall. And I said, it may take 5 years, it may take 10 years. In the meantime, I will use my personal checkbook to solve for problems that resonated with me personally as a consumer, as a small business owner. So I'm one of the earliest angels in India. My journey began with my first investment in a company called Carvale in 2007. It was a car buying portal. I was a seat check in there, and ultimately it culminated after merging into Carted as an IPO, $1 billion IPO. I had long exited before that.
Nice.
But I was very fortunate to have a series of such investments which did very well over time. And that gave me the confidence each time to keep taking bigger and bigger bets and more unobvious bets. And I can talk more on that in a bit if you want.
Yeah, no, I think this is super interesting. Look, I'm based here in the UK. I've got a lot of friends in the US. It's always a difficult decision to go back to India. What changes have you seen? Since you've been an operator in the US for 10 years versus you've been investing into startups here in India. What experience would you want to share with listeners who are Indian Americans or British Indians who would want to go back, or they're still thinking about it? What would you like to say?
When I came back to India, I realized first and foremost I had changed.
Right.
At the surface, India had not changed.
Awesome.
10 years out, 15 years, obviously that was 2006. Today, 18 years later, India has visibly changed.
Yeah.
There's a lot more infrastructure, highways, and all of that. But I realized the changes were below skin deep. What had changed were the aspirations of people. So I realized that, I was working in this hedge fund. And initially, I was living at a hotel. So I was living in a kind of a bubble. So I realized that I am kind of, sort of helicoptering my experience. And that would not give me insights really to be a good investor. So I said, what I'm going to do is I'm going to start talking to the everyday man in India, the working class.
Okay.
And so I started to put myself into situations where I would be speaking to them. So if I was waiting at an office, I spend more time talking to the doorman than the person sitting next to me, right?
Okay.
I took 500 cab rides. These were all not air conditioned. These were all these rickety cabs, the black and yellow ones you see in Bombay. And I would ask the same questions to every taxi driver. Why are you here? What is your goal? These are all economic migrants from poorer parts of India.
Right.
What are you going to do with them? All of them were there for what are you going to do with the money that you save, and so on and so on. And one thing became very clear after those conversations was that we had not a middle class, but we had an amazing aspiring class. And ultimately, what we deeply aspire for, we all get. If an entire generation aspires for something, they will get it. And what every single driver was saying to me in those cabs is that my son or daughter will not be driving a cab for somebody. If they're going to drive a car, they will own it themselves. Right? So that I said, and they wanted their kids to have white collar jobs and do much better. So there was this upward progression. And they were actually spending at that point of time almost half their salary on education for their kids, private tuition and so on, which was really amazing for me to hear because I could finally see that this is a generation which is going to leapfrog. That was something which I wanted to see. When an entire race wants to move forward, there is no power on earth that can stop them. So that gave me a lot of hope. So then the question really began in my head, how do we accelerate this leap forward? And I could see very clearly it is digital because physical is friction. And that's why I began to double down more and more on investments. And when you say, okay, hey, I want to move back to India and maybe I want to do something similar to what you did. I want to invest. Where should I invest? How do I do it? Ultimately, it all comes down to single pain points that you're solving. So what I broke it down to were consumer journeys. The reason I invested in Carvale was I was buying a car that week. So I was
Oh,
driving around dealerships, collecting brochures, plugging in the data, the pricing, etc., on an Excel sheet. And I met this founder who I actually knew. When I done my startup, we had an office in India, and he had been kind of helping us. So when I met with him, he had just launched this venture, and he said, "Listen, why are you wasting your time driving around? Look at my website."
yeah.
And I not even bothered to Google to see if this company exists, anything like this existed. What I spent 5 days doing, he showed me in 5 minutes, right?
Mm.
So I invested instantly. And he had good unit economics, it made sense. So there were these no-brainer opportunities. And I have never honestly worried about the size of the market in India, which is what
Okay.
makes us kind of different here.
Yeah.
You know? And therefore, I think India is a high friction country, and therefore it is a very fertile market to be investing as an early stage investor. Lots of problems to solve.
Yeah. Yeah. Interesting. And you were also able to invest into EzeTap and MoneyTap and a lot of other fintech companies. Was it your thesis to invest into a fintech company? Because I heard Nitin Gupta from PayU saying that if you build something in fintech in India, it's difficult for you to fail. But was that your thesis? Is looking into a lot of investments that angel investments that you've done in the fintech space?
I'll take a step back in terms of thesis. The way I thought about my investments was first based on a development paradigm for India.
Mm-hmm.
So first of all, fundamentally, I believe that whatever the first world citizen or consumer or small business has access to will be delivered to all citizens of the world.
Right.
It's not a question of if, it is inevitable. When I left India, people didn't have phones.
Yeah.
When I came back, everybody had phones.
True.
When I was growing up, before my teen years, very few people had televisions.
Mm-hmm.
By the time I left India, most people had televisions. Not everybody had a TV, right?
Yeah.
So my thesis was when I came back to India, those were the early days of a smartphone. It was even, Steve Ballmer said, who's going to buy a $500 iPhone, right? He mocked it. My view is everybody will have a smartphone. Moore's law will apply. My view is also everybody will have a broadband connection. And therefore, I believe that everything in terms of, whether it's healthcare penetration, insurance penetration, or basic luxuries of life that we say today, air conditioning, right?
Right.
We cannot imagine in India our domestic staff having air conditioning, but I think it is inevitable.
Mm.
When I invested in Carvale, my thesis was again very simple. I said, ultimately, everybody wants to have an experience of driving in a four-wheeler.
Yeah.
Right? Nobody wants to risk their family on a two-wheeler. As
Mm.
simple as that. Why would you want that, 6-month-old infant, your wife holding onto that, and you're out on a bike?
Right.
So it's the innovators' challenge to deliver that experience. And today we are there, right? Today we are offering fractional experience of a car through the Olas and the Uber. As
Yeah.
simple as
Yeah.
that.
True. True.
The investor's job is not to imagine the final state of that experience. The investor must just believe that this is inevitable. And this is in a developing country very easy. Because you already experienced it in the first one. Now you come back, you have that kind of like a view of the future, what will bring here. Now, it may not appear in the same way, but in general, you will get the same, and you would start to connect the dots as I'm speaking.
Yeah.
Right?
Yeah. True. True.
Why did I do more of fintech? So look, ultimately, when I came back to India in 05, 06, people would say, oh, the average Indian is too cheap to pay up for anything.
Yeah.
In Mumbai, one thing you learn is time is money. Mumbai is a very time-sensitive city.
True. True.
If you get on a cab, you don't have change, the driver will not be wasting time finding change. He will just drive off and say, okay, no problems, I'll make money elsewhere. Time is money.
Mm.
So therefore, one thing is very clear to me is that when you shrink something, when you shrink the turnaround time by a factor of 10x or 90%, when you shrink time, money, and effort by a factor of 10x, you will get adoption. And I saw the single largest opportunity actually happening in banking. Again, it was sort of another epiphany that happened with me. I was trying to open a bank account for my small investment management company. And the bank in question was taking about a month, which I thought was kind of ridiculous because it was just exchange of data. right? My data living on the cloud going to them. I finally gave up. I went to the bank branch. I removed my application. I said, I'll go somewhere else. I called an Ola, which is like the Uber of India. It showed up in 3 minutes. And it struck me that a 2-ton mass of atoms could arrive at my doorstep within a few minutes, and these people can't, move a few thousand, whatever, 1 MB of data, so to speak. So I realized the bank of the future is a 5-minute bank. Because people go batshit crazy if they have to wait more than 5 minutes for anything. We're getting trained subliminally every day, whether you go to a fast food restaurant, wherever you have to wait more than 5 minutes. Even your grandma must have told your grandpa at some point in time, I'll make you tea in 5 minutes, right?
Yeah.
Something like that, whatever. Those days I'm talking about even 100 years ago.
Yeah.
So I think we are all kind of, this is this invisible barrier. And so I started to invest in speeding up banking, speeding up the flow of money. Ultimately, look, progress comes from increasing your GDP growth. And what is GDP? It's the velocity of goods, trades, and services. If you shift from physical to digital mode, your acceleration is almost infinite. That is the idea. So the more an economy digitizes, the more acceleration one should see. And that is really my goal. So I'm saying, let's start it by one individual journey versus the other. And in banking, I found the biggest problem was KYC. The biggest problem when I invested in EzeTap was that in India, e-commerce was cash on delivery. 80% of the deliveries were not paid beforehand. Somebody would receive the delivery, open the package, pay, you would have removed it from your days in India. And so obviously there was friction. You don't have change, now the delivery guy is waiting and so on. So EzeTap came and said it was inspired, to give full credit to Square. It will be a low-cost POS terminal. It's like a dongle you attach to your phone, and voila, you go ahead and you make a transaction. And so those days they couldn't carry these devices because they're very expensive. They're like $250 devices. This guy said, I'll do it for $40 to $50. So that was the reason I wrote my first seed check. However, I found EzeTap could not enter the Kirana market, which is, in America, what you call bodegas or the corner streets, because KYC was taking too long. So I seeded a company called Signzy, which now is one of the leading, digital KYC companies, powers onboarding for most of the banks. It solved this problem. So each of these problems have emerged in front of us. We can choose to look at them and say, this is the default nature of our economy, or we can try to do something about it. Here's another advice to your friends who come back is you can have two choices. You can complain and somebody will call you a spoiled NRI, non-resident Indian, or you can do something about it. And I chose to do something about it. I chose to invest in somebody solving for the problem. So these insights are again coming from friction. So every time I complain, I'm like, okay, maybe there's an opportunity to do something about it.
No, that's great because I think that's your operator mindset that, look at every opportunity and, every opportunity will lead to, every problem will lead to some opportunity which can be solved. And India is such an interesting market, especially when it comes to 8i Ventures, how do you look at scenario planning and, what's the thesis about investing and about, or do you also look at, uh, putting in reserves into the winners? Is that just wanted to understand more about your thesis there?
Look, we launched 8i because we found that we were investing in unobvious companies. Like when I did the seed round in Signzy, I had to call my friends and say, listen, if you lose money, it's on me. If you make money, it's yours. I did the same thing for Slice. Slice had done a seed round and then it needed a top up. I met the founder. I liked what he was doing. Slice, by the way, now is the single largest, it's a digital challenger bank in India. It actually has the nod from RBI to acquire a bank. So this is what you may call the new Bank of India. Right? A very, very impressive company. The last round valuation is $1.5 billion. This is one of the companies which could become a decacorn in India, I feel, in the future. Same thing, I had to tell my buddies who came in with me, listen, if you lose money, it's mine. And so, we are all up almost 90x on that investment at this point. So we found that every single time we resonated with the problem, there were no other investors. Because I found that in general, most of the VCs in India, they're operating from a market map. That market map is composed out of what is a market map for Silicon Valley.
Yeah.
So you go to a CB Insights, you download that market map and say, I'm going to plug everything here. You know, but the truth is, no generational company was born out of a market map. Google was
Yeah.
not on any market map. OpenAI was not on any market map, and so on. I mean, the stories are so many, right? What we have always seen is that a ground up opportunity makes more sense. A pain point which is severe, which the founder resonates with, and is obsessed about solving. Those are the kind of people we end up backing. And so we realized, first one was obviously a small fund for us. It was only 13 million.
Yeah.
And we very quickly realized that we needed far more capital to support our companies. Also, the other thing we realized that we were finding these great companies, but we didn't have the capital to build adequate ownership in our winners.
Right.
So also the first fund, I would say, looking back, we would have kept less reserve ratio.
Okay.
Right. So I think if you're a small fund, in general, remember that ownership can be built only in the first two checks. Once it has emerged as a winner, it will become expensive, and the bigger investors will come in, and they will start to bid up the value.
Right.
So your opportunity as an early guy is to build conviction as soon as possible, which is what we tend to do very well at our end. We move fast. We don't agonize over months and months of due diligence. We do our due diligence quickly. We're not lazy about it. And when we see, seed investing is not investing, it is believing.
Oh, okay.
You're underwriting also with your right brain.
Right.
Also underwriting a human, not just an idea. And then you combine both the art and the science of it, and you arrive at a good investment.
Right. And Vikram, is it possible to have a 20% ownership in the first two checks? Is that something which you focus on?
In India, it is. Valuations are very attractive right now. In fact, I think that this is possibly going to be, starting this year, one of the best vintages in Indian VC, if you ask me. Valuations are reasonable, and the size of the opportunity is large. There are many larger funds. Many people have raised large funds, so their economics are very different. So if you're a $500 million fund, and you are still adhering to the power law that a single investment will return your entire fund, it basically means that you need to own 10% of a $5 billion outcome.
Yeah.
At a $5 billion IPO.
Right.
So I'm sure that may happen in the future, but in the current market, there are only 6 companies with a market cap of more than 3 billion at IPO. It's much easier today. So today, the Indian IPO market is quite robust. Remember, the percentage share of internet in the listed market cap of India is only 1% and change. It's about 50 billion. Our market cap is about 4.5 trillion or more at this point of time.
Right.
My sense is it should be closer to 10%, reflecting the participation that internet has in India's GDP right now, right? In some form or the other. So if I look ahead, I think over the next decade, if you think India's market cap doubles, if not more, we are looking at $1 trillion market cap for the internet. We are at, so you got a 20x jump. It's fairly easy today to list a company with about 75 to $100 million in revenue. And you can get a $500 million market cap. And we've seen a number of companies go out, receive great response from good anchor mutual funds, the local banks and the others, and then double their valuation to $1 billion. So I feel that today, this is a great environment to create a unicorn in the listed market. So what our mandate is very simple. We seed our companies. We try to groom them to $100 million of revenue.
Okay.
And then that should IPO. And then, if we own 10% of these companies at $500 million, we return our fund.
Oh, nice. Got it. And, for a long time, there was a closed IPO in India. Obviously, the IPO market has changed, but where do you see, the liquidity coming in the next 24 to 48 months? Would it be the listed companies where, most of the startups will be able to sell, or do you think the IPO window will be opened up for Indian startups?
I think the IPO window for startups is open today.
Okay.
Except they demand profitability. So a lot of Indian companies have raised a bunch of money. I'm very glad to say that they are not going over the cliff saying, I don't care about what the environment is like, I will keep burning money. So most of the folks have gotten the message, I would say even across the world. And if you see over the last 1 year, when you see the numbers come through for most of the startups, you may not see as much revenue growth as much as a boost in gross profit margins.
Mm.
That is the general story with all well-run firms. Like they're jettisoning their low-margin businesses, doubling down where the unit economics are good. And so they are getting into shape for an IPO exit in the next 2 to 3 years.
Right.
That's at least what we are seeing in our portfolio, and we know that's what's going on elsewhere. So I think, markets here as well as in the US or Europe, they demand profitability. The difference between IPOing in the US versus in India is that in the US, to have a good IPO, you need at least $250 million in revenue.
Yeah.
Because also maybe this year a Stripe will go public or a SpaceX will go public. They will suck all that capital out.
Yeah.
Right?
Yeah.
You're
True.
competing against attention. Whereas in India, you might see a Swiggy go public. It
Yeah.
might try for a $10 billion market cap and so on. But there is enough demand for $500 million outcomes at this point in time. So I would say, unlike the US, the market is open here.
Okay. Okay.
It's not a crowded market. I mean, last time I checked, there were only 25 new age companies in India, which are in the listed domain. And they would be like 3,000 to 4,000 listed companies. We need 10 to 20x that number.
Correct. Interesting.
The
And
door is open. Yeah, you must qualify.
correct. Interesting. And what sort of founders does ATI Ventures attract, and what type of founder types are attracted to big brands? With whom you would look at co-leading.
So generally, look, we start with the why of a company first. So for us, what is really important is why this business should exist. Is this problem worth solving?
Right.
How severe is the pain point? It should not be something which is a nice to have solution.
Right.
It's got to be something that causes severe pain to people. So therefore, they are trying to open to experimentation and trying something new. And we're looking for founders who are obsessed with solving the problem, and they should have a very genuine reason why they're doing it. Because we know that the journey from seed to market domination is very bumpy. So many times there will be, and funding is not the only reason you may give up. There will be many things that will come your way which will test your resolve. Unless the founder's North Star is that I must solve for this pain and it's a personal situation, they may give up. Right? Of course, some may also pivot, but in which case they'll go back and say, I'm going to solve for this person. It has to be very, very personal connection. That's what I feel. Actually, then we look for the ability of that founder. Of course, now that the Indian venture ecosystem has matured a little bit, we are seeing more second and third time founders.
Okay.
Or people come from where they've been early employees at a successful startup, like you have been at an Uber or a Flipkart or so on. So we're definitely seeing more experienced founders coming, but that has not deterred us from backing first time founders also. Many of our companies are all first time founders. See, what we look for long term is grit and tenacity. In India is a country of insanely smart people.
Yeah.
I walk outside my office, I throw a stone, it's going to bounce off the head of some IIT kid. I can tell you that. Right? It's like this country is awash in brain power. What I'm looking for is insight, execution, and tenacity.
Yeah.
That's what gets to a big outcome for everybody.
Got it. Interesting. And traction team market, how do you rank in prioritization, especially when it comes to seed investing?
Very early, when we are so early, very rarely do we see any traction. If we are fortunate, we might see some early product market fit.
Okay.
For us, the most important aspect then after problem is going to be the team.
Okay.
Right. And then the traction and the market. Look, I remember when I was when I was building a startup in the US, people used to complain about TAM as well. And then over the years, I remember reading somewhere somebody remarked that the US economy is so deep that every single pain point is now $1 billion opportunity. And I'm getting a sense that India is digitizing so fast.
Yeah.
With 1 billion phone lines and 650 million smartphones.
Yeah.
That we are going the same way. So every single pain point, while it's not visible to us today, how large the TAM could be, it touches so many people. Like 100 million users is not easy to crack. I mean, not difficult to crack in this market, like a pain point that is there.
Nice.
So we've not worried too much about TAM at the end of the day. Obviously, when you come to Series A, you want product market fit and traction and all of those things. Those things matter for the larger funds, but
Right.
that has never deterred us.
Correct. And especially when it comes to selling your positions, what's been your lessons on what is the right time to sell your positions?
Look, sorry, my greatest lesson I took away from my first job, where I worked as a trader.
Right.
I was on a proprietary trading desk, and my boss was a super smart guy, and he taught me one lesson. He said, Vikram, on every position in life, be either long or short. Do not be in.
Was
And
interesting.
I asked him, I said, why do you say that, Mario? He said, Mario said, hold means you either don't know enough or you don't care. Neither of which is acceptable. So if you don't know enough, you must research as much as possible till you arrive at a point that you don't know. In which case, whatever you're doing, you're just winging it. So be aware of that, right? And therefore, better to exit and go somewhere else. As simple as that. So every time there is a new round in our portfolio, we look at from the same lens.
Okay.
Are we going to add or are we going to exit?
Okay.
And we will add if we see category creation emerging, category leadership emerging, because the winner take all effect rewards the category winner. The winner will always be worth more than the rest of the folks put together. You see that with Tesla, Amazon, and so many others, and NVIDIA, right?
Yeah.
What does that winning mean? It means 3 M's for us: market share increase, margin increase, and moat. Moat is a qualitative factor. Moat is what is going to make it really hard for you to get replaced by a customer. As simple as that, right? How sticky do you get? So we look at those things, and we will keep adding as much as we can to maintain or even grow our ownership till such time we run out of money within our fund. And after that, if we are not selling, it means we wish we could have put more. As simple as that. We will sell if we feel that valuations are now far, far, far divorced from the current reality, in which case we start taking off something.
Okay.
Right? Possible we may do that. Or something has changed where our original thesis is no longer valid. In which case our original conviction was based on a thesis which is invalid. Therefore, we are reassessing it, and therefore we decide to exit. Or of course, we are at the end of our fund, then we will be forced to take some exits. We are not there yet.
Yeah. Got it. Vikram, before the call, I asked this to another VC also. Who's your customer? Is it a founder, or is it the LP? And how can managers build relationship with LPs?
We asked ourselves the same question when my co-founder Vishy and I came together to do this fund. And we said, like a listed company or any private company,
right?
Who makes you successful? That is your customer.
Right.
For us, who makes us successful is the founder.
Okay.
A great founder who chooses not to take my money.
Yeah.
And goes on to create the biggest successful outcome.
Yeah.
It's far more important to me than somebody who wanted to put 10% of my target raise and did not come through. The LP capital is replaceable.
Oh, okay.
It's like a shareholder.
Right.
But the founder who I missed out is the primary factor which drives my success and my returns. Because I am subject to the power law. My LP capital is obviously very essential. Good quality, stable LP capital, which gives us a foundation on which we can keep investing through different fund families cycles. But our ability to secure our investments in the most important technology companies of tomorrow, right, is what drives our success. And ultimately, unlike the listed market where I could go and choose open, I could go and buy NVIDIA tomorrow.
Yeah.
the CEO cannot say no to me. It's in the market.
Yeah.
When NVIDIA is private, he can say no to me.
Mm.
Sam Altman can say no to their VCs,
Yeah.
to nice VCs, right? So therefore, the founder is the most important stakeholder for us.
Correct. And especially for emerging managers, what are some of the biggest mistakes they make when they're looking to approach LPs?
Look, I think given the nature of the investment is typically a 10-year lock
Yeah.
for the LPs. At least in India, I would answer this slightly differently compared to maybe the rest of the world. In the rest of the world, I would say particularly with the US VC LP ecosystem, it's more mature. They understand these long lockups, and it comes from a specific allocation.
Okay.
Within India, the local LP ecosystem is developing very rapidly, I would say. Possibly the fastest developing part of the entire VC ecosystem is the LP ecosystem.
Interesting.
In the last 10 years alone, we have seen the birth and the maturation of family offices at a scale we've never seen. It's actually tracking the formalization of the economy.
Yeah.
So as the economy formalizes, more and more of these companies are giving dividends to the owners. These dividend pools are getting larger and ultimately now being managed by some family office, some family member as a family office. So, but in India, long term is 5 years.
Oh, okay. Mm.
To get them to commit 10 years is a long time. So trust building is very, very important.
Okay.
So I think that it's very important that you keep communicating with your LPs. If you get a first meeting and they don't say yes immediately, keep communicating, put them on your distribution list, try to see them as many times as you can.
Right.
Same thing that you would do in the US. But I think constant communication, engagement, all of those things are very important. The other thing, I've never done is, we're very fortunate to get a very pedigreed group of LPs from some of the top family offices are with us. We have never looked at the size of a family office and then tried to push them for a check equivalent to what I think they should be giving. Sometimes the person writing the check has just started that program.
Yeah.
So they may be writing a small check. Maybe they just want to get a sense of how you are, right? And a larger check will follow in the future.
Okay. Okay. Correct.
I won't worry too much about. I would build relationships and then convert these relationships into trusted relationships over time initially.
Right.
And then over time, what's going to happen is India is going to experience one of the largest transfers of wealth in the coming decades.
Nice.
And PC will be a part of it. So that journey is starting today. If you
Okay.
want to be part of those journeys, and part of the allocation of some of the largest family offices in the world, this is actually an opportune moment. Remember, in India, the average founder owns more than 50%, as opposed to the US.
Yeah. Yeah.
When you think of this 4.5 trillion market cap, remember more than 3 trillion is with individuals. Mumbai alone has some 98 billionaires.
Yeah.
So the quantum of wealth that will get created, and VC will have its own allocation. And also, I would say we are still so early that most family offices are just now beginning to form the gatekeeper complex. You can still build relationship directly with the principals.
Okay.
So it's a good time. So that's what we try to do, engage as much as possible, get to know them. All our money so far has been raised through referrals.
Okay.
Family office connecting or some institution connecting. It's been a
Correct.
good way.
Vikram, you made an interesting point. Like in India, the relation, the length is like 5 years. So do you think the fund length is also 5 years, or is it like a 10-year lock-in like you have in the US?
So they would love for it to be 5 years.
Okay.
But so 10 years for them is a very, very long time. The sense of time in India is different.
Yeah.
I think every 5 years a new generation emerges in India, to be honest.
Yeah.
Like cultural shift which happens every 5 years.
Yeah.
So the sense of time here is a little bit different. Maybe because the pace of change is also very high.
Yeah, it is. Yeah.
In the same amount of time, it feels like 10 years went by. I don't know.
Yeah. Got it. Interesting. And for listeners who, just out of college, or, just went to B school, what advice would you give to young people on what they should expect when they're entering the venture landscape?
We have a number of folks who reach out to us and they want to start their careers in VC.
Yeah.
VC is a long feedback cycle play,
Yeah.
right? So one thing I would say is the earlier you start, the better off you are.
Okay.
However, I think the best thing you can do for your education is go work with a startup for at least a couple of years, an early stage. Ideally, a startup which has got like a superb team.
Yeah.
Do that much underwriting. And then leave to become a VC so that you can understand that the nature of going from idea to product and then to business is organic and chaotic.
Yeah.
Whereas when you join a VC fund, you will be looking at Excel sheets and you'll be expecting, that 10% extrapolation every month or 20% every month.
Yeah.
Right. So you should not be under the fallacy that a company can magically grow 10, 20, 30, 40% every month. Right. There will be bumps. Some months will be good. Some months will be bad. And you can't be over obsessing because look at your own life. Look at the stock market. Stock market doesn't go up 10% every day or every month.
True.
And so startups evolution mimics real life. In many ways, when you look at a very early stage startup, it's like a child learning to walk. Can you predict when your kid can walk or talk? You don't know.
Yeah. Yeah.
One day it happens.
Yeah.
So you have to have patience. And I think that's what's really important with very early stage companies. That's why I say you want to be a believer. Your founder should be able to call you on the day she feels that, why the hell am I doing this? You need to remind her why she started on this journey to begin with. Right? I always tell my founder that I said, be wary of taking our money because if your mother stops believing in you, we will still believe in you. Right?
Right.
So we are going to be like all in here in terms of like, urging you and pushing you forward.
Right.
And that's what has worked well for us.
Correct. Vikram, I quickly want to do the top 3. What's your favorite business book?
It's not a business book, so to say, but The Art of War. Sun Tzu's Art of War has been very instructive for me. Mostly, it goes kind of against the grain that, you must work 10,000 hours or something. Like you got to put in a lot of effort. I think being very strategic and tactical about how you spend your time. A victory without a battle is superior to one without 100 battles.
Yeah.
So that's something that I believe in.
Got it. We'll put down in the show notes. And, if you could go back in time when you started investing or you started 8i Ventures, what is the one thing you would have focused on or done thing differently?
I would have written larger checks on every single investment we had at seed. I would have kept a lower reserve ratio and written larger checks, or tried to get larger allocations more aggressively.
Okay.
If you have the conviction, just go for it.
Interesting. And do you have any favorite online tool, for example, Gmail, Slack, Zoom?
Well, obviously, I tend to use OpenAI and Perplexity quite a bit these days.
Right.
So that's been my favorite tool right now.
Got it. We'll put down in the show notes. And Vikram, what is the best way people can reach out to you and know more about 8i Ventures?
You can write directly to me, Vikram, Vikram, 8ivc.com, like the number, ivc.com.
Got it. We'll put that in the show notes, Vikram. Thank you so much for taking the time and speaking to us. I really enjoyed this and learned a lot about the Indian ecosystem and the venture landscape out there.
Thanks, Rohit. Had a blast. And thank you for hosting me at your show. Look forward.